Alexandria B, and we are back with another swing trade watch list of the week. Y'all, we are 27 for 27 in the last 6 weeks, and we will keep this streak going. We will keep this going, all right? Y'all, let me know in the comments, what have you traded from the watch list in these last 6 weeks? Did you profit? Did you lose? Let's talk about it. However, let's go ahead and kick this video off with the economic calendar and earnings. We'll head over to the futures and then get into the watch list. Y'all, on the economic calendar this week, I need for you to understand that this is that 1 week that you need to mind your business. I know we mind our business a lot on this watch list, but I'm gonna need you to mind your business several times, several days out of this week, okay? Monday and Tuesday, nothing going on. Go touch grass. Wednesday, that man gonna get up there and tell us what the new interest rates is. Will it be cut? Will it rise? Will it stay the same? All right. We also have CPI and consumer sentiment, of course, jobless claims. I love that, especially when I'm over there in the industrial sector. So mind your business Monday through Wednesday and show up on Thursday and Friday. That's my opinion. That's my opinion. That's just my opinion there, okay? Now, as far as earnings, not much. The little conspiracies inside of my head is thinking, of course, there's not that much on the earnings calendar because there's too much on the economic calendar. However, I absolutely love that Tuesday after the market closes, we have Oracle. Y'all know we've had that on the watch list. We also have Broadcom Wednesday after hours and Adobe Thursday after hours. Is that Robinhood? No, it's not. I'm here for this calendar, actually. We have a very chill week. You don't need to trade every day of the week. That's how you give money back. But that's not what y'all here for, so that's okay. Let's go ahead and hop into our futures and check out ES, NQ, and the Dow. The futures, and we're going to kick it off with NQ. So I have this on the hourly right now, and you can see why. Here on the 4-hour, we are in this range in between 1920 and 19,120. All right. Ooh, these numbers are so big. Now it is up here to the 120 range, but I put mine at the 113 because that is the highest close that we have had in this range since Wednesday the 5th. All right. So this level of support here, y'all see this. We're stuck in a very tight range. So on the 1 hour, what I was looking for last week was, would we hold this as support? All right, and this is from the 18,940 to about 18,960, and we can see that on Friday pre-market it did break below this support level that it had, held this previous demand zone in here, right? We got back up. The buyers definitely stepped in here. We can say that this was a little bit of a double top there. All right, so I'm curious, will we be able to hold this 1920 range, or will we make our way back down towards this 18,960 to 1840? To be honest, I'm not interested in playing anything in this range because we've already seen, unless this breaks the 18 or the 19,113 or breaks below the 18,940, I'm honestly not interested in playing this. This is a very tight range that price has been in for a few days, for 3 trading days, and we already know that Monday, mind your business. Tuesday, mind your business. Wednesday, baby, mind your business. So probably we shouldn't really expect to see NQ or ES break out of this very tight range that it's in until then, because we need something that will make the market move. We need a catalyst. We have looked at the economic calendar to see what that catalyst is and what day it will come already. All right. I am not interested in playing this range because I'm not that much of a scalper. If you are a scalper and you play this range, only play it off of the low. Only play it off of the lows, off of these touches of support or this touch of resistance here. Only catch the reject, and you need to remember that it is a scalp. All right, so let's go ahead and check out ES. We come to ES on the daily, and we have the same setup here. All right, I'll tell y'all what these green levels are here on the smaller time frame, but y'all can see even from the watch list that we had last week, we have followed this trend beautifully, beautifully, beautifully. Let me straighten that trend line actually out. Okay, one touch April 24th, second touch May 2nd, third touch May 31st. All right, what do we see up here at the top? I know not everyone trades candlestick patterns, price action patterns. That's fine. I do. What do we see that this is? It's an evening star pattern. It's an evening star pattern. Now, if I turn my moving averages on, because y'all know how I feel about that, okay? We do have this 20 MA here hovering around 53.10 with the 50 MA down here at the 52.20. Am I saying that we're going to drop over 100 points down to the 50 MA? No. Am I saying that I see that we got some bearishness up top for a slight pullback? Yeah, I do see that. Pullbacks are fine. Pullbacks are fine, my babes. Like, look at this. This pullback was from May 23rd to it got to the trend line May 31st. It lost from 53.34 down to 52.05, right? That is a 100-point dip that it took in a couple of days. It only took a few days for it to do it. We are not going to the end of the world if we do break below this support level, this 53.35, and come down to the trend line. I would actually prefer it, okay? This is where I'd be ready to buy. Now, if we look on the weekly, we have the 20 MA in this range. Let's actually go down to the 1 hour. I know it's very colorful chart, but we got the 20 just about ready to cross below the 50. That's a bearish signal. Right here at this support level, we have the 100 at this 53.35. We have our 100 moving average. I'm not mad at that, all right? And if we were to lose this 53.35, we do have the 200 moving average at 53.07, where look at this very high probable move that bounced out of this range right there. Look at that. You got this beautiful move up on Wednesday from 9 a.m. until 6 p.m. Just straight up all day, right? And then we entered into the consolidation period, into this very tight range. I would not be mad to see price return back down here, and I would not be surprised either. All right, so now let us go ahead and we're going to hop into our swing trade watch list of the week. Some of y'all got into this with me from when we were on Instagram Live. Honestly, don't have much to say. I don't have much to say. I'm fully expecting to see shop pull back. My target is going to be the 63.62, right in line here with the highs of this, which is also breaking that gap right there. Let me mark this off for you. And see this gap that we have here, this gap up that was made is also where this, once this gap down, right? Where that met up, found a high, and we are working our way back towards that. We have crossed over the 20. Let me turn on my 9 moving average, and we have the 9 crossing above the 20. Now, what we see here is a cup and handle. A cup and handle forming, all right? So we should expect for when it gets to the brim of the cup, for it to then pull back and make us that handle, because they're going to shake some sellers out, right? Or they're going to fake some sellers out. They're going to shake out the buyers and then make the sellers think it's coming back down, and then fake them out and then grab their shares up and then in turn push it back up. That is what we expect to see off of this pattern. All right. Now, something that I want to point out to y'all is remember that, yes, has the 9 moving average crossed above the 20 moving average, which is bullish? Absolutely. But is the 20 moving average also curling up? No. So when I play this out in my head and I look ahead, I'm like, okay, so price will continue to come up to this previous resistance level, which was previous support, which is also in line here with the trend line and my 50 moving average right there. And as price is moving up, the 20 MA, my yellow one, is going to move up with it too. And potentially probably come right in here towards the 60, 50, 61 range. And then as price pulls back, it will catch up with the 20 MA, which has already had a bullish crossover with the 9 crossing above it. But now it'll have time to catch up with the 20 MA, right? Because that'll move on up towards there as price is moving up as well. Hold the hold it as support and then move its way back up. All right. That is the move that I'm expecting to see. So if you see any sort of stoppage around 64.50, scale out or go ahead and sell while it's making its pullback. Just make sure that you have an alert set here at about 60.50. Google. I feel like Google just looks absolutely beautiful. Y'all know I love to start on a naked chart. So I hope that y'all caught this. When this dipped down, we said, okay, if it breaks the low of last week, we're trading it down to the support level at 162. If it stays in this range and it works its way back up, we still just have higher lows. And that's what we got. Now, did this come back down? Listen, this range here, so we have from, let me say it from the bottom, from 171.24 to 174.58. Lots of things happen to Google in there. Let's look at it on the hourly. This is where you want to catch it. Rejecting or coming through this range. Bouncing it, holding it. This is where you want to catch it. Look at these beautiful, I would call these day trading moves. So this was on a Wednesday, kind of consolidated there. But it broke the high of it. So you could have got this push from 176 to 177. It's a dollar move. When you saw this reject here at the same place, you could have done it from the 178 back down to the zone at 174. And that happened in a day, a $4 move, right? So this range has been beautiful. This reject off of it to get that move down and all that. So I've definitely been respecting it. When it comes to tech, with the economic data week that we have coming up, and the fact that we're going to wake up on Monday and Nvidia will be $100-something, I'm not that sure about tech. I have no desire to play in that at all. All right. What I will point out here though is this trend line that price has absolutely respected from these lows. Yeah, right. And this came from April 19th. We did get this bounce here, holding it. I would love to see Google possibly hold like this 173 in order for me to continue to trade it up. Below 171 is just a no-go for me, right? To go ahead and delete this. Now let's look on the weekly. What we would have thought would have been an evening star would have only been confirmed if it broke the low of this last week, but instead it held it. We have two spinning tops there. Yeah, holding that 20 MA as well. The 9 and the 20. Listen, I see this only as a day trade. This isn't anything that I'm comfortable entering into a swing on yet. We have way too many variables coming up this week, and that's just me. That's just my advice. If you're not already in Google, which I don't understand why you wouldn't be, it's been on the watch list. If you're in my home, we've been talking about it since March. We've been in it since March. So for me, this has great day trade setups. So if this was to come below 174, you get a close below 174.05, I would absolutely look to day trade this down to 171.38. I would absolutely look to day trade that down to the 171.38 range, possibly even more so 171.84. And if you lost the low of the previous week, losing 169.33, again, then I'm looking to trade that down towards the 162.50, 163. But I just don't see a swing setup. I see leaps. I see some you should have been in, and I see some day trades, but not necessarily a safe entry to analyze out to enter into Google for a swing. My faces tell it all. All right. I have enjoyed sharing this Google riddle with y'all. So what I put out on social media and my mentees and the Discord, everything is tell me, what does UPS have in common in November 2012, November 2016, November 2020? Me saying those dates is the biggest hint. Those are the last 3 election years that we have had, right? Logistics, post-election season, you do some things, okay? So we'll go back to, and we're gonna look on the monthly. Let's go ahead and cut this out, and we'll go to 2012 here, from 71 to the, yeah, just from 2012. November 2012, from the 71 to 2014 would have been halfway through, and that's where you see that UPS starts to pull back a little bit. But then in 2016, you still get this push here from 107 to 137. And then in 2018, that's when it took its dip a little bit. Then you get November 2020, which is here, and you get this move from 157 up to February 2022, when it started to take its dip, to 225. So UPS on election years, on average, and I only did the last 3 election seasons. Do your due diligence and go back to the election season of 2008, 2004, and 2000, because UPS is also on the chart. It extends back to 2000, right? It moves at least 60%. It gets at least a 60% move. From 2020, it was over 100% move, right? Now, what I want to show y'all here is I want to put a level here, and it'll be a green one at the low of November 2020, which is here around 157. All right, the low of November 2020 this month was 156.97. We're gonna say 157. Now we're gonna come back to the weekly. I know I have many levels here because I was day trading them as well, but we're gonna come back to the weekly. In the same range that we took when we traded UPS down is the same range that we're watching for this to cross above now. All right, over 157.32, which is the low of 2020. I don't have to say too much more. I know that y'all are going to be in it, right? I know that y'all are going to be in it. It is, invest in it as well, my babies. Invest in these logistic companies during election season as well. All right, now on the weekly, here at the 147.50, 148 range, we have the 20 EMA on the weekly. On the monthly, on the daily, right? To get to that 147.78, look, that's going to make it past the 20 and the 50 EMA. We love that for ourselves. We love that, okay? Me personally, I'm waiting for this to cross the 148, and I'm in that thing, all right? Safety is let it cross the low of the November range, or if you just even wanted to wait until above 163, but y'all see what I see there. My eyes are on UPS. This one I would not say to enter early, even if you bought time. Just wait for a safe entry. You know what I'm saying? Just wait for a safe entry. Come back to the daily with the 9 MA on there, and I wanted to show y'all this. So the green is my 9, yellow is my 20, blue is my 50. All right, it caught the 9 again, just like when we were looking at when we were looking at shop, and we were looking at how, okay, when the 9 MA does cross above the 20 MA, more than likely the 20 MA will still be pointing down. So it'll have to pull back a little bit so it can catch the 20 and then move up with it, right? And so since we see these barriers that we have here, and they're not doing bullish crossovers yet, just wait until it firmly and clearly crosses all of them, which won't happen this week. It will not happen this week, but keep your eyes on it. All right. Next up, we have Amazon. I love this. I'm really a fan of Amazon. It has not created new highs yet. This bounce that it did off of here on the 31st, working its way up. Honestly, to be honest, on Amazon, baby, you just give me this. Give me that. That's what I'm waiting on, and I can leave it as simple as that. I am not interested in trying to catch this $5 empty space here from this 184. We'll just say 185 to the 190. I'm not interested in doing that because history tells me it rejected it once, it rejected it twice. Now, if this gets up here and it rejects 190 again, guess what I'm doing? I'm getting puts, all right? Because historically, 100% of the time that it rejects 190, it moves down to 173. You get a $20 move down from 190 to 173, from 190 to 173. If this comes up here and rejects 190 again, I'm trading it down to 173 and scaling out around 181. It's as simple as that. As simple as that, my babies. Now let's look at our moving averages here. Converged. Ugh. And I don't really necessarily like to see that my averages are converged. Here I do like this hold. This is it held the 200 or the 100 MA here and here. This was prior to earnings too. And then earnings came, it somewhat pushed up. Low volume pullback. To be honest, I'm waiting on Amazon to get to the 190 and I'm gonna make my money there. It'll either break above and retest and hold it, or it'll reject there and we're going to trade it down to the 173. According to the technicals, or according to the history of this chart. Home Depot. Now, Home Depot just came in. Home Depot the last 2 weeks, y'all. We still trying to catch it. So I'll be really quick with this. Y'all see this consolidation that it's doing in here? It has not left this range that we're watching for. It has not broke these lows. So I have an alert set for below 323. And that's what I'm watching for. All right, so Home Depot, I'm actually going to go straight to the monthly on this one, because what I find absolutely fascinating is that we got this evening star, okay? We got a lower close. Let's see, the month of April, it closed at 334.22. The month of May, it closed at 334.87. Okay. And we've already broken the open and the close of the previous 2 months, and the low of last month was 323.77, which is right there where the 20 MA is. Ciao. Y'all see this range here from the 323.77 down to where the 50 moving average is on the monthly at 311.97. We'll just say 312. I'd love to catch that. I am fully expecting for it to bounce. I fully expect for it to bounce in that range, okay? Fully expect for it to bounce in that range. It will not stop me from wanting to catch this move from 323 down to 312. That will be absolutely beautiful, and let it bounce. Let it bounce in there. Now, if it does lose the monthly 50 moving average, if so, the 312, I'm looking to trade it down. I'm looking to trade that sucker down. We will continue to trade it down. Let's go to the weekly. I mean, just look what's right there on the weekly. Right in this range, if we break into here, we have the 200 and the 100 moving average there. Fully expecting a bounce. All right, now we've cleared all averages here on the daily time frame, so that kind of got me like, you might have a push down, baby. You might have you a little good push down. All right, because the lower the time frame that we go, we've cleared all averages. All right, so I am expecting to see more bearish momentum here with Home Depot, and we shall catch it. Oracle. Remember, Oracle has earnings this week, you guys. Oracle has earnings this week. If you're not already in, don't get in. And if you are already in, which you should be, if you are already in, have minimal positions running, or go ahead and exit. Just exit. Just exit. Take the profit. Take the profit. Get back in after. Okay? That's the only advice that I have for y'all, honestly. That's all I got for you. If you're not already in this, wait for this. Okay? Because that is at all-time high with earnings about to report. Okay? If you're not already in that, if you have less than 60 days on your swing contract, take the profit and get out. All right? Just wait till post earnings and see what it does then. Because right now, you're looking kind of double topish to me. Right now, it's looking kind of double topish. So we're going to wait and see. Does it break above our 127.50, or are we going to break below our trend line and break below like our 119? We'll know then, are we trading this up into the new highs or below 119? Or are we trading this back down towards 114, where it could possibly double top and give us this move up, or double bottom and give us the move back up, or this double top is going to give us this move back down. All right. We will see prior to earnings, but y'all have y'all's chart set up. You ready? You're on go time. All right. Here for Abercrombie and Fitch. This has been beautiful. I did not enter back in last week because there was no clarity for it. All right. But that 178.31 that we've already been watching, if we're able to break above there to trade it into the 190 range, have at it. All right. I would just fully expect for it to get there and then pull back towards the 180 range before it blasts back off. Okay. Because right now, all we have is so far a higher low after it went just straight up parabolic. Just insane move. However, as this is like pushing down, look at the volume. It's a low volume pullback. Abercrombie and Fitch is on his big stuff. All right. We are going to now move to Eli Lilly because I wanted to show y'all something as far as insider transactions. If something is on your watch list, you should always pull it up on your insider transactions. So let me show that to y'all now. All right, so the website that I am utilizing right now is SpinViz, and the feature that I'm showing y'all is no cost. We love that. So I typed in Eli Lilly in the search bar here at the top. And I'm just going to scroll down. I'm going to check out the insider transactions. And as y'all can see, the owner of Eli Lilly, who he owns 10%, you have your executive VP, sales VP, SVP, right? Look at these dates. Look at these dates, y'all. Look at this. They've been selling. All right. Now let's head on back over here to the chart and check that out. All right, so when I look at Eli Lilly, I see one of the clearest setups that there is. All right, now this range that you see marked off here was a post-earnings move in, 2 earnings seasons ago. Okay, we got this big push up. It did a liquidity crush. The day after earnings, kind of went back up, and it stayed in this very tight range since February of 798 to the 740, right? Stayed in a very tight, what was that, $60 range. Okay, now 875 is the average price. That is the projected average price for Eli Lilly, with 1023 being the projected high for Eli Lilly this year. All right, based off of analyst ratings. So we finally got this move out of this range. Okay, we got the break out of this range 3 weeks ago. It pulled back, retested it, held this range, and then we got a higher close last week. So the new high that we have right now is the exact high, 856.81, right? Y'all see what that average push is 875. Now with the selling off on it and whatnot that we see with the insider transactions, it just kind of makes sense to me that it'll get to this average and then pull back a little bit. It's only June, y'all. It's only June. We still got 6 more months to go for this to get to the projected high of the analyst rating, the 1023, right? That's a big move left. Y'all think it's not gonna pull back first? Okay, look at that beautiful trend. All right, with the 20 MA right here. I am looking for Eli Lilly to probably get up to this 875, because in a week its average range is a $41 move from the low to the high, right? That's in line with getting the 875. That's in line with getting there. All right, maybe giving us a little pullback, or possibly getting up there, rejecting, giving us the pullback already. Whatever it is, I'm not trading Eli Lilly to the upside until it pushes back and then catches as a level of support there. All right, so when we come down to the daily and we're looking at these averages, I would love to see Eli Lilly get this move back down to this 751. Okay, so I want to go and show y'all on bar chart, and we're going to look at the open interest and see, is it favoring calls or puts. This is also a no cost feature when you're on bar chart. All I did was come and type in LLY, Eli Lilly's ticker, in the search bar, and then over here on the left hand side we're going to go to the put call ratio. So a way for me to easily see, if I scroll down to the bottom, the volume is the current day's volume. So this is Friday's volume, all right? The open interest is the overall open interest for Eli Lilly, and we can see that it's favoring calls. 142 positions open on the call side, 134 positions opened on the put side. Now let's look at the open interest for, well, not volume, child. Let's look at the open interest for some puts in here, okay? You definitely have a lot of high open interest for puts. Let's see where the volume, but this 7/19/2024, the volume matches up with it. So see how they were actively buying on Friday? They were actively buying put positions for the 7/19/2024 expiration date. Remember, Friday's candle on Eli Lilly was real bullish. Real bullish. Look at this put volume, all right? Which matches with high open interest on the put side. It's also high open interest over here on the call. It's kind of matching up there. It's pretty equal. So this is something that I'll keep my eye on as I'm waiting to see if Eli Lilly will pull back. I will keep my eye on this expiration date and the amount of open interest on the put and call side to see will the puts be increasing while they sell off on their call positions that they're holding. And we can also see quite a large amount of put volume came in on Friday for the 6/21 date with the open interest matching it as well. We're going to go 7/19 because it's a very large stock that makes very large moves, right? And we're going to come down to the calls. And this OICHG is the open interest change for Friday. So I can see that for these puts. And we're going to look at our target, which is around 750. And look at, they opened up and held 138 more positions at the 750. And on Friday, it was $2.49. So if we're expecting to see Eli Lilly come down a little bit, right? That means that this, if we're expecting to see a pullback on Eli Lilly overall, we would want to see like a bearish move. We would want to see the weekly candle start off going to the upside first so it can get that upper wick out the way and then continue its move the rest of the week. So if Eli Lilly ends up going up and finding a place to reject around that 875, right? Because it's just crowd psychology. If we're looking at that level, hundreds of thousands of other people are too, right? So as it's moving up, price is moving up to get to that 875, this strike price or the premium for the 750 put is going to become more affordable, right? So I like to go ahead and look at, what position is it that I'm going to look at, or what contract would I be interested in getting so I can track it and catch it at the best price, all right? Because if I'm catching at the reject, let's hope that this premium is closer to $2 than it is closer to $2.50 or $3, all right? Which is still an amazing price. This is an amazing price for Eli Lilly. We loves, okay? Now, of course, it's only going to show you these strike prices, but if you come to the top and you click where it says near the money, we're going to click show all. It's going to show me every strike price, all right? That's all the calls. We're going to come down to the puts. We know 750 is really like our target here, but I want to look below 750 to see if they're just hiding their money anywhere random. I'm looking at the OI change. No, they haven't added any more positions. They decreased some of these positions in here. So this 750, even possibly the 740, it didn't have that much volume on it Friday comparative to the 750, but I'm not mad at the amount of positions that they held, and it is more affordable. The last trade price was $1.91. I'm not mad at it. Now, back here on the chart, I want to show y'all on the hour and the 4 hour. We'll start with the 4 hour. And the average that I have pulled up is my 9 moving average. We already see this tweezer top that's coming right here, right? And we know that price will have to pull back at least to this 9 at around 837. When we come to the hourly, we can see this rejections happening at this high here. That price is already starting to pull back. So this losing the hourly 9 MA at 848. Look how you could really day trade that, which I do not suggest day trading Eli Lilly, but I'm just saying, right? You got that 848 down to 837. You know, $10 move that you could catch right there for a day trade. However, I am looking for early entry on Eli Lilly for below 837. Below 837, I'm absolutely going to try to catch this down to 800. Because if I pull up these other averages, right, you got the 837 to 824. Below there, you have clear space back down to this trend line where we also have my 50 moving average right there. giving us confluence right on the trend line. So then you have 795 for another place to scale out. If you're holding below 795 down to 775, scale out from 795 down to the 751 where we have our 200 moving average, which is flowing up. Eli Lilly is absolutely bullish. You see them selling off on it. When people sell, the price drops. Just a little pullback. Catch the ride down, because then you'll know exactly when Eli Lilly bounces, and you're going to ride it back up to the $1,023 projected high. All right? I love y'all so much. Thank y'all for the support on the watch list. Make sure that you hit like, leave all the comments and questions that you have, subscribe, turn the notifications on, all that stuff. I'll see y'all at the top.